Hello friends, welcome to my channel. In today's video, we are going to analyze a micro cap company which is being requested by a lot of our friends in our YouTube and Telegram community. So here we are analyzing Sri Ganesh Remedies in today's video. So before we begin, if you are new to the channel, please do subscribe and hit the bell notification icon and follow me on different social media as well. Let's get started. So Sri Ganesh Remedies belongs to Ganesh Group of companies. This group of companies was started by Mr. Chandulal Kothia in 1991. In this group, the first company which was started was Ashok Pharmachem, and Sri Ganesh Remedies is one of these group companies. This company is headquartered in Ankleshwar, Gujarat, and this company is into manufacture of intermediates relating to pharmaceuticals as well as fine chemicals. This company is also into contract manufacturing, and they came up with their IPO in 2017. They export products to more than 30 countries across the globe. Now let's talk about the management of the company. The promoter and the director of this company since inception is Mr. Chandulal Kotia. He is the chairman and managing director. By qualification, he has done masters in physical chemistry and diploma in pharmacy. He has more than 20 years of experience in manufacturing related to pharma and chemicals, and he manages the entire company, its strategy and its growth. Coming to the brief history and the different milestones which this company has achieved in the past, in 1992, this group came into the pharma sector and started their companies. In 2004, Sri Ganesh Remedies was started. In 2005, this company got a ISO accreditation, and in 2011, they got a national award by MSME Secretary. In 2013, Outstanding Ownership Award was given by Prime Minister Mr. Narendra Modi to Mr. Chandulal Kotia, and in 2017, they came up with their IPO in the MSME category initially. In 2018, they started a new plant, and in 2020, the stock entered into the regular BSE main board platform. If we see the corporate governance, I did not find any corporate governance issues about this company, which is a good sign. Now let's talk about the business of the company. They are into broadly four small segments. If you see, the first one is pharmaceutical intermediates. What are intermediates? In our earlier videos, we have discussed intermediates are used to produce APIs, and APIs in turn are used to produce formulations. They are into fine chemicals, and they are also into contract manufacturing. In contract manufacturing, they have different chemical processes which they do, and also they do bulk drugs contract manufacturing. Now coming to the different pharmaceutical intermediates, here is a list of different intermediates which they produce. If you would like to read it, you can pause and read the screen, because there are a lot of technical terms. We will not get into technicalities and discuss each one of them. Now coming to the different chemical reactions which they do for themselves as well as contract manufacturing, these are the different chemical reactions which are chlorination, reduction, bromination and others. For contract manufacturing, they have an edge or expertise in chlorination using phenyl chloride. And they also do entire tailor-made services. If any customer comes to them with a requirement, right from the research stage till the manufacturing, entire customization they do, and they are willing to modify their infrastructure facilities as per their customer requirements and the product which the customer requires. And for distribution, they do it from their Indian warehouse or the Indian manufacturing facility, and they have a collaboration with a company in UK where they also start distributing different products which they exported from India. If you see the revenue by geography, around 20% revenue is from domestic and almost 80% is the exports revenue. Now coming to the market and the industry in which this company operates, as you know, the global pharma industry is growing pretty well, and by 2023, the size would be almost $1.57 trillion. India is one of the largest providers of generic drugs globally, and about 50% of the entire globe's vaccine demand is met by Indian companies. Indian pharma sector, if you see, it will grow up to USD 100 billion by 2025. So by this, you can understand there is huge scope in this industry itself, and the company will get a lot of tailwinds for growth. Medicine spending at the consumer level will grow about 9 to 12% for the next 5 years. So our consumption of medicine is also growing pretty fast. If you see the general drugs, about 20% of the global demand is export demand is met by Indian companies. And Indian companies are getting a lot of support from the government also, like they are allowing 100% FDI, and they are also coming up with different subsidiaries and PLI schemes to support the pharma companies in India. There are different hundreds of thousands of pharma companies in India, but just to compare a few of similar size of these companies, they are Vivimed Labs, Lasa Subachandriks, Themis Medicare, Zota Healthcare, Copran, Bajaj Healthcare, and different companies which are of similar size of this company. As per the management, their competitive advantage is quality which they provide to their customers, the management's experience, the manufacturing facilities which they have, and the relationships which they maintain with the customers. Although I did not find a very strong competitive advantage for this company. Coming to the different growth prospects, recently they have acquired a firm called Ashok Pharmachem, which is one of their group API manufacturers, and they want to focus to increase their export business more and more. They want to get more and more customers by word of mouth, by maintaining their customer satisfaction levels. They will strengthen their marketing capabilities. They will invest more and more on research, and they will be introducing more and more products and different new chemical processes. What are the different risks which you may face if you invest in this company? Since it's a micro cap company, we have to be very careful while investing in such companies, and we should not go all in with the entire investment at once. So raw material prices, as and when they fluctuate, their margins are getting affected. They have forex risk because 80% of their revenue is coming from exports. They do not have long-term contracts with their customers. So on order by order basis, they are getting revenue. So there may be inconsistencies in revenue. Their revenue is dependent on selected customers, and there are regulatory risks, as it is the same for all the pharma companies. In a few years, this company has negative operating cash flows, which is a red signal for me. And this group has other companies which are doing similar business as these companies. So there may be conflict of interest which may be there in the management's mind while operating the business of this company, which could be a risk for an investor. Now, after discussing the business model risks and the other things in detail, now let's come to the financials. First, analyzing the quarter results, the Q3 FY21 with the last year's. Operating revenue is about 13 crores, which is up by 26%. EBITDA about 3.72 crores, up by compared to 1.75 crores last year. EBITDA margin is better to 28% compared to 16%. Profit after tax is 2.77 crores compared to 1 crore earlier year. Profit after tax margin is better from 10 to 20%. But quarter by quarter, if you see, the results are not so consistent every time. Coming to the revenue, if you see from FY17 to 20, it is steadily growing from 19 to 58 crores. In the last 9 months, FY21, it has clocked a revenue of about 33 crores. So they may end up more or less same as last year's revenue this year. EBITDA has grown from 4 crores to about 15 crores in the last 4 years, and in the last 9 months, it's about 10.5 crores, which is again going to end similar to the last year. Net profit has grown from 2.64 crores to about 9.62 crores, and for the last 9 months, it is about 6.7 crores. EBITDA margins are stabilizing somewhere between 25 to 30%. Coming to the profit after tax margins, they are moving somewhere between 17 to 19%. So margin wise, the company is having good margins in profit. If you see the fixed assets, they have grown from 4 crores in FY16 to 16 crores in FY20. So the company is investing continuously in the capex, which is a good sign. Trade receivables have grown from 5 crores to 16 crores. So in the last year, which is FY20, the trade receivables have shooten up, which is a slight bit of concern. This means that the company is not getting early payments for the sales which they are making. Equity is consistent except for the IPO. Reserves are growing pretty fast. Debt is pretty under control. It's almost a debt-free company. Investments, if you see, are about 7 crores. Cash is about 1.75 crore. Remuneration to whole-time directors is about 1 crore. And free cash flow for FY20 is 3.84 crores. But in FY18 and 19, the company has negative operating cash flows. Stat auditors are Rushik J. Patel and company. As of now, there are no suspicious related party transactions. ROE is about 25%, ROC 32%, so the return ratios are pretty good. It is a dividend paying company paying about 0.46% dividend yield. Inventory turnover ratio is 10.6, which shows that the stock is moving pretty fast. The promoters have increased the stake in the company in the recent quarters, which is a good sign. Coming to the shareholding pattern, promoters hold about 68.4% majority of the stake, which is good. Public about 31.6%. There is no institutional investment in the company and there's no pledge. Coming to the valuations part, the last traded price was about 295, 52-week high and low is 58 to 349. So if you see in the last 1 year itself, the stock has given about 350% returns, and the last 3 years about 93% CAGR. So in terms of returns, it is a very good stock. Market cap is just 291 crores in spite of such an increase in the stock price. So it's a micro cap company. P is about 30. Industry P as a pharma sector is about 25. EPS is 9.62. Book value is 42. So the PB ratio comes to about 6.92. So in terms of valuation, being a micro cap, I feel it is a bit expensive. So for someone who wants to invest in this company, he can accumulate the stock at somewhere around 200 to 250 range, because the stock is respecting its 50 DMA, and 50 DMA comes to around 250 rupees. So 200 to 250 could be a range of accumulation for someone who wants to invest. At that range, the PE valuation in terms of PE will also drop down. There are no much news and announcements because being a micro cap, the company is not talking much in the media. So in the recent August 2020, there was about 3:26 bonus issued by the company. So this is about Sri Ganesh Remedies. I hope you like it. To summarize, the company's management is experienced in the business. The company's fundamentals, I would say, are average. This sector will give a lot of tailwinds to this company. The debt is under control. Growth rate is good, but I did not find any strong moat for this company. Competition is going to be very fierce. The cash flows are sometimes going negative, which is a red sign. And valuation wise, it is a little expensive. So for people who are skeptical, it is worth a watch, and watch it for a couple of quarters and then start investing. For people who are convinced and have faith in the management, they can invest a little amount, and as and when the company performs better and better, they can increase their investment. Thank you for watching this video. I hope you like it. Please do hit the subscribe button and the bell icon. You can consider joining our YouTube community where we are doing daily stock and market analysis, and you can follow me on different social media channels as well. So thank you for watching and have a wonderful, wonderful day.